Good evening. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday. And this is the 8th of March, 2023. It's my mother's birthday today. Interesting. Hi, Mom. When we look at the markets, how do you play in front of the all-important jobs report coming out Friday morning? I'm not certain. It's a difficult one. And the reason is, here's how I'm looking at it. While the market's looking for 224,000 jobs, there's a whisper that maybe they'll lower the 517,000 by some amount that they had in the last report. Just what if? You get 350, 400,000 new jobs coming in. And what if they go up on that number, the 517? I don't think I want to stand in front of that train. So it's difficult for me to tell you to step into the metals right here, because if these numbers come out hot again, you're going to get one correction to the downside. If they revise downward sharply, the 517 jobs to some really low number, and you miss the 224, you have a different game that takes place. Fed Chair Powell set this up where it's a rough time to go into that report. Afterwards, I'm very comfortable. Afterwards, win, lose, or draw, what am I facing? Some CPI numbers. They're not going to be what moves the Fed one way or the other, in my opinion. What's going to move the Fed is if this jobs report is super hot. So assuming it comes in at the 224, and assuming the market comes in and leaves pretty similar to the 517 jobs that we had, I'm guessing the Fed would go 25 basis points. The high number changes the game, and then we have to take a look at what's the impact. The dollar probably goes up, metal markets go down, the stock market probably goes down, because once you go to 50, they'll worry about 50 more right after that. These are the ways you have to look at it. Be careful. This is a dangerous time for the next 24 hours. So what do I do in that? There's never a gun to your head. You don't have to make a trade. Remember that. When I look at the gold market, the battleground is crystal clear. It is the 18-day average of closes. You're under it. So for the moment, you have lower highs, but you haven't taken out this all-important low over here. Now, if we come back to that low, I showed it to you the other day, and I want to show it again. It's right here, 1808.80. So the market can play around that 18-day average. We don't know if it's going to get under that number, over, pop back up. We wait. We'll see what it does. But to me, that's the important number. You can see how the patterns have been coming down, and the market's trying to find its support again, one more time, in that 1810, 1815 area. You see it right here. You got to 1813.14 today. So I'm right in the zone that I told you about before. You broke the back of the attempt at the uptrend. The market's again fighting at the 100-day average in green, the 200-day average, and the Bollinger Band. So am I missing anything right here by saying, hey, I think that the smartest thing you could do at this point in time is sideline yourself for a day or so? I don't think so, in gold at least. And you're oversold. So then I step over to the gold silver. Well, the thing that's very evident is silver just continues to lose to the gold market. You can see how the market is fighting a battle, and you have a very bearish situation that just happened. The 18-day average just crossed under the 200. So you have a bearish crossover in the market right into the Bollinger Band. You're probably going to try to eke out even lower lows. The question is, do you develop an embedded reading between now and Monday? You heard me, Monday. That'll be what you have to pay attention to. In the copper market, you're still very much in a downtrend. Lower highs, lower lows, momentum not oversold. Resistance pretty clear at 407.45, let's call it. If the market were to pop over 409.50, you break the downtrend, but you don't start an uptrend. And more important, I've told you, I think the trading in this narrow band is going to be very bad for your financial health. I still think so. You're not going up or down. You're stuck in the platinum market, just hanging here at the 18-day average in the 200. It's almost as though the market, other traders are seeing what I am, and you ask yourself, how much risk do I want to take on in front of all that? And that becomes the biggest story that you have to worry about. In the palladium market, down you go. oversold into the Bollinger Band. If you were sitting next to me, I'd give you the elbow in the side and say, that's where you cover shorts. You walk away. Each time you've hit the Bollinger Band, within short order, you've had a bounce. So why would this time be any different? It could be, but why should it be any different? That's what you look at. And last in the dollar index, if you've taken my enhanced Bollinger Band course, and I'm assuming a lot of you have, I sell a lot of these courses, and it's not for any reason other than I swear, I think it's going to change your trading. In a scale of 1 to 10, if you look at it, probably close to a 7 or 8. That's my guess. I talk to people. They write me about it. I'll speak on the phone, and they tell me, Ira, it definitely has made a difference because you're up here and you're all rah, rah, rah. The market's going to go. And I'm saying, well, you only stay over that number 5% of the time. For the time that it does go, 95% of the time it won't. How often do you get left holding the bag up there because you didn't take any money off the table? Now, there's a way to take some money off the table, all of the money off the table. There's 2 different ways. The course teaches you that, and that's where you're at in that market. Now, what you want to do is get the information of the day right now. Example. Today we were writing on jobs report, okay, coming up. Then we were talking on what did the Fed chair say. We were publishing all day long. Here's what the speech is. Here's the highlights of it. We put it both, by the way, in our newsletters. It publishes in our charting platforms, in the mobile platforms. Let us give you this information. Give it a try. We're commodity people. We've been doing this a heck of a long time. This gray hair is there for a reason. I became a registered broker in '69. Each of my brokers with me probably have 25, 30 years experience. We got quite a few brokers throughout the firm. And these guys probably 20 years is, if I had to guess, probably 20 years is an average. If I'm giving a guess, but it wouldn't surprise me between our trade desks and all that we do. Pretty interesting. So if you're looking for people that do this day in and day out and live by it, give us a try. Just go to our website under free offers. You can click right up here at any point in time. It'll take you there. Sign up for the different things you might want to give it a try with. You might want to go to the research and education section when you go to our website. It's iraepstein.com. If you have questions, call my staff. Other than that, I'm Ira. You have a great day.